The Kilgore College Small Business Development Center provides potential and existing business owners with the practical assistance needed to survive, grow, and prosper. We offer free, confidential, individual business counseling for small businesses involved in the retail, service, manufacturing, and wholesale industries, and just for those wanting to explore starting a business. Areas include business feasibility and startup planning, business plan preparation, financial management, and general management strategies. We also assist with SBA loans and conventional loans. To schedule your free appointment, please call us at 903-757-5857.
The Longview Economic Development Corporation, LEADCO, exists to diversify and expand the economy of Longview and provide the highest level of job opportunities and quality of life to Longview residents. We can help your business with the site selection process. Our trained, professional staff has extensive experience assisting businesses find suitable sites and buildings to meet the needs of their growing establishments and their customers. These expansions stimulate our economy with new investment and new jobs. For more information about LEADCO and what we do for Longview, please visit us on the web at longviewusa.com.
In the last segment, we introduced the concept called performance-based pay, really saying that today employees really, perhaps who even work slower, might actually get more pay because they're on the job more. And that's what we're doing, is sort of anti of what we really want to be able to do. We really today want to be able to reward employees for good behavior. We want to penalize those employees who don't do things like we want to, or basically lose money for the company. So through a performance-based pay system, we can actually make these things happen. So first of all today, let's talk about what performance-based pay is. And is it actually defined? It can be defined through the labor boards or whatever, but typically performance-based pay is a salary, a commission, a piece rate, or some other method that is job-based, based on a plan to fulfill an obligation or requirement. Now, what that really means is that according to the Department of Labor and according to labor standards, and you can certainly check the labor standards in your particular area to be sure that it is correct, we can actually pay hourly workers what they're saying any way we want. However, what's important is, because they are defined as hourly workers, we must have a formula that takes the compensation back to the hourly level. So let's talk about this one more time. In the United States, we have two different kinds of employees. We have those that are exempt from overtime and those that are not exempt. Exempt from overtime are typically those people that are considered salaried employees. We don't have to pay them overtime, or in most states it's not like that. But then we have non-exempt employees that have overtime requirements. Well, we know if we have hourly workers, then number one, we must establish an hourly rate to pay that particular worker on an hourly basis. And number two, we must have an hourly rate to formulate overtime if they happen to work either over 8 hours in some states or over 40 hours. So what has been defined as performance-based pay is you can pay people different ways, piece rate, commissions, things like that. But since they are non-exempt employees, we have to take all this compensation and put it back into what we consider to be an hourly rate. Now let me show you exactly how that works. On this particular slide, we actually are seeing some of the federal and state labor standards. And once again, state laws are a little bit different. Okay, remember the federal government sets the minimum guidelines and then states go from there. But generally, this is the formula that you use to compensate workers on performance-based pay. The formula actually says that we take the total compensation earned for the pay period. So the pay period could be 1 week, it could be 2 weeks, it could be twice a month, it could be monthly. The key is, how do you pay co-workers now? So we take the total compensation earned for that period. Total compensation is also defined as all wages, bonuses, commissions, spiffs, any compensation that would be subject to payroll taxes would be considered compensation. So it's total compensation, not normal compensation. And this is where a lot of companies get confused. When we say total compensation, it's not just their hourly wage we're talking about, but it's also, for example, commissions. So if you do have an hourly worker and you pay that person a commission that particular pay period, that's part of total compensation. So the first part of the formula is total compensation for the pay period. What is the amount of wages that have been earned by the employee that considers everything earned, that's subject to payroll taxes? And then the second thing is we divide that by the total hours worked. Because they're hourly workers, they are required, and we are required as employers, to keep time cards on them. So we basically take the time card and reflect how many hours they actually worked in the pay period. So if we take the total compensation and divide it by the hours worked, as the formula shows, that gives us what we call the average hourly wage. Now remember, this is not necessarily their normal hourly wage. It is their average hourly wage for the pay period. So total compensation for the pay period divided by hours worked for the pay period equals average hourly wage for the pay period. That is the amount of monies that is going to be paid on an hourly basis, the monies that they've actually earned on an hourly basis. Now there's a couple of things we've got to look at. When we make this formula, whenever we make this calculation for those people that are hourly workers, first thing we've got to be sure about is the average hourly wage equal to or above minimum wage for our state? Because if it's not, then immediately what we've paid that particular worker is not valid. That hourly wage has got to be equal to or above minimum wage. If it is, that part of the equation is great. Not a problem. We've met minimum wage requirements. The second thing that we have to do is take a look at the total hours worked and to determine if there are any overtime hours needing to be paid. In most states, if the total hours worked is over 40, additional compensation must be paid. In some states, if workers work over 8 hours in a day, that is considered overtime hours after 8 hours. So the question is part of the total hours worked, are any of those hours overtime hours? If they are, additional compensation must be paid. Now let me summarize this. So we have a formula that says at the end of the pay period, we take total compensation of all the wages that the employee has earned. Everything. Commissions, spiffs, bonuses, anything related that is subject to payroll taxes. We divide that by their time card, which is required, to show the hours worked. That number that we get by dividing is equal to the average hourly wage. That is the average hourly wage that we use to see, number one, did we meet minimum wage requirements? Number two, that's the average hourly wage that we use to compute overtime pay if the hours worked were in excess of overtime.